In under 5 minutes, by the end of this video, you'll understand how to read this like it's your second language. So what actually are these rectangles? They're called candlesticks. It's a visual way to show data over a set amount of time. This could be 1 minute, 1 hour, 1 day, 1 week, anything. So these charts are made up of these tiny little rectangles. And what do these rectangles actually tell us? Let's find out now. So these are called candlesticks, and they tell us 4 different things: where prices opened, where prices closed, the highest price of that time frame, and the lowest price of that time frame. So here's the anatomy of a candle. First we have the body, then we have a high wick, and then a low wick. Then we have the highest price we received, and then the lowest price we received, and the open, which is here, and the close, which is above. Why? Because when we opened here, price has gone up to this close. That means price has appreciated, therefore we have a green candle. So now pause this video and figure out where these labels will all be on this red candle here. Alright, so if you pictured something like this, then you're correct. The only thing that has changed is the open and the close, because now we have the open above and the close below. Since we now have a red candle, we can tell that the open was up here and price has lost value, like depreciated, and now we have a close below here. On the green one, we had the open below and the close above, which means during this time we've opened at this price and then we closed at this price, which means in this time frame the value has appreciated. So when it appreciated, the candle goes green, and when it depreciates, the candle goes red. Alright, this is an example in the most simplest forms. So we're looking at the day chart here. This whole candle represents 1 day's worth of data. And if we're looking at the Apple chart here, and these are the prices that we have here. So let's put this into play. So the market opened at 100 US. And then we can tell by looking at this wick, the price must have came down all the way to this 99 US level, and then came straight back up to 102 US, and then ended up closing the day at 101 US. Now remember, obviously it's not certain that price went in a movement where it went down, came up, and then went down and closed at this level. This can be pretty much anything. It could have been go up a bit, reaches down like that, and then go down one more time, and then we could have moved sideways a bit, then gone up, then ended up closing here. It's not certain that it's always going to be in this pattern like this, down, up, down, but this can also show down, up, up, little bit of down, consolidation, then finally goes up, then go down again. Like it can change varying on the day, and it can pretty much be whatever it wants to be. Just as a rough idea, both of these charts will end up showing a daily candle somewhat like this. It doesn't have to be perfect down, up, down. It can be a bit messy, but eventually at the end of the day, we'll see a candle like this print. Alright, so let's take a look at a real example. So this is Bitcoin, and we'll take a look at this 1 day candle over here, which is the 5th of May, as you can see right there. So going into the 1 hour chart, we can map these out. So the candle starts at 11 AM Australian time, so we can mark out that area there, and then obviously it will close 11 AM the next day. So if we go to 11 AM on the 6th of May, it will close just around here. So using these 4 lines, let's mark it out. So to make this simple, at the very open, we have price just here, and then we have the close where we want to find the last minute of the day. So since we're finding the close, since it's a red candle, it's going to be at the very bottom because price was here, but on the very last hour we ended up closing all the way down here. Now we just have to find the highest point and the lowest point, which will create our wicks. Obviously we can see in between these 2 orange lines we have the highest point, which is up here, and the lowest point is not this one except this one over here. So now if we go back to the day chart, it should all line up. We have the wick marked out there, and then we have the lowest wick marked out there, then we have the open here, and then the close there. So if we're looking at the day chart, going into the 1 hour is basically zooming into the chart to see the smaller time movements. Great, so now you know how to read a candle. In the next part, I'll show you what the candles tell us and the story behind each candle, and how you can use different confluences to increase your probability of winning a trade. But for now, consolidate on this information, study it a bit more, and make sure you got it locked in, and stay tuned for part 2.